Okay, let's see if we can get the rest of this done in one video. I did not do this in class because you guys seem to have a pretty good handle on it, but I want to make sure that you have the information. Okay, so if you're going to try a budget and figure out net cash flow, we have here that the salary is $31.25, and that is net, which means that's what they take home. It's not before taxes or anything. The earnings are after taxes, that's what it says, and assume 1 month equals 4 weeks. Okay, so that's something that's important, and we talked about this in class. A month is really 4 1/3 weeks, but that's okay. So what the things that we're going to need to look at closely here are any of these items that say something other than a month. Okay, if the rent is $1,500 a month, that means the monthly expenses is $1,500. If groceries are $150 a week, that means it's $600 a month because it is $150 times 4. Utilities are $180 a month. Semi-annually means it is every 6 months, which means I'm going to have to take the 1,100 and divide by 6, which gives me $183.33. Car insurance is semi-annually, which means to come out with what I have monthly, I'm going to take $650 and divide by 6, and that gives me $108.33. Gasoline, $50 a week, that's going to be $200 because it is 50 times 4. The phone is monthly. I guess I should do dollars and cents on all of them, huh? And miscellaneous is $220 a month. So if it says monthly, just transfer it over. If it is weekly, month, or semi-annually, then you're going to have to figure that out. Or annually. Okay, and then net cash flow is going to be income minus expenses. So you have $31.25 minus, and when you add all this up, this is $30.81.66. So you're cutting it close, but you have a positive cash flow of $43.34. So you can put that money in savings, or whatever you want to do with it. Okay, now in your homework, we all have some trouble with insurance, which don't feel bad because nobody understands insurance. And I don't even think the people who do insurance understand insurance. But anyway, here's what we're going to do. You have a choice between 2 health plans. Now, one of the things that you need to remember is, and I'll just put this down at the bottom here, a copay is your maximum cost, and a deductible is your maximum cost. So if whatever the bill is, if there's a copay, you only pay a certain amount and the insurance company handles the rest. If you have a deductible, you only pay up to that amount, and if it goes over that, then the insurance company pays the rest. If it's below the deductible, then you pay all of it. But that is your maximum cost. So let's go ahead and look at this and see what we can do. Okay, so the first one is an office visit. And it shows that you have a copay of $25, which means every time you go in, you pay $25. And it's not your maximum cost, it is just flat your cost. If you have an emergency room visit, you have a deductible of $500, which means you pay anything up to $500, and then they pay over that. An operation has a $5,000 deductible, which means you pay up to $5,000, and if it goes over that, the insurance pays the rest. And this one is $2,000. And then finally, your premium. And this is a monthly premium. And this is a 1-year period. Okay, so let's just go through all these instances and see what's going on here. All right, so the first thing is you have an emergency room visit. And I'll do what I did before here and show what you pay and what the insurance pays. So you can see that it's going to total up the 400, the 100, or whatever. It's just who pays what part of it. Okay, an emergency room visit on Plan A, you have to pay everything up to 500. So that means you are responsible for 400 and the insurance doesn't have to pay any of it. However, on this plan, your maximum is 250, which means the insurance is going to pay the other 150. The 400 is still being paid, it's just being paid in 2 different sources. Okay, an office visit, $25. We don't know what the insurance is paying on that because you just pay the $25. Then we have a surgery that's $6,500. On this plan, you pay up to $5,000, which means you're going to pay $5,000, and the insurance company is going to pay the additional $1,500. Here, your deductible is $2,000. Since it's over $2,000, you pay all of that, and the insurance company pays $4,500. Okay, here you have a surgery that's $2,400. You don't have to pay $5,000. You have to pay your that is your maximum cost. So the $2,400, you're going to end up paying all of that, and the insurance pays nothing. Of the $2,400, you have to pay $2,000, and then the insurance will pay the rest. Another office visit, you pay $25. Oh, it's $100, so we do know that that's $75. I'm sorry. And on either plan, you pay $25. All right, you have another emergency room visit. This bad year. In an emergency room, you have to pay $500. If it goes beyond that, which it does, this is $500. And so that means the insurance company is going to pay $700. Here, you only have to pay $250. That is your deductible, your maximum cost. And the insurance is going to pay $950. Once again, $800 for emergency room. What a terrible year. Let's see. You have to pay $500 of the $800, and the insurance pays the other $300. Here, you only have to pay $250, which means the insurance is going to pay $550. All right, but what does it cost you to get this coverage? You have to take your premium and multiply it by 12 to find your annual cost. So $250 times 12 is going to be $3,000. $450 times 12 is equal to $5,400. Okay, so when you add all this up, your total expense with this plan is $11,850. Your total with this plan is $10,200. Okay, so that you have to make the decision on your own of what it is that you want out of your insurance. Hopefully this is a freakish year and not a normal thing. Okay, now let's talk about taxes. When you're talking about taxes, you are going to use, and we will provide this to you. Let me see if I can find it. On the test, we will provide you this information. We won't have long-term capital gains, but we will have the tax table, we will have the child tax credit information, and we will have the FICA stuff. Okay. You will not have access to this chart, but this is a good flow chart to figure out how you're supposed to do it. Okay, so we have two different situations here. We did one in class, so I'm going to go over it. But this process is the same. We are going to take the gross income, we are going to subtract the adjustments, we are going to subtract the deductions, we are going to subtract any child care cover, any tax credits, oops. Okay, so this is exactly how it will come on your 1040 form. Okay, gross income is wages, tips, others, compensations, interest earned, anything that comes to you on as income. So the income is the salary and the interest earned. So this is your gross income. So that is $52,100. The adjustments are IRAs, 401k. So this is an adjustment. So I am going to subtract $4,000, which means my adjusted gross income now is 48,000, or Sandra's is 100. Deduction, it says she's taking the standard deduction. If I look at my table, the standard deduction for a single person is $12,200, which means my income is now $35,900. That is what I'm going to do the tax on. Okay, so how do I calculate tax? I go to the table, but I'm using this number. It is more than 9,700, so it's going to be 10% of 9,700 plus, in the next category, it goes up to 39,475, so I can stop there. So it is going to be 12% of 35,900 minus 9,700. So this gives me 970. This gives me 3144. So the total tax is $4,114. Tax credits, it doesn't say anything. It's zero. There are no children. So the total income tax, if there was anything here, I would subtract that, but the total tax is $4,114. To calculate the rate, I just take the tax divided by the gross income, 4114 divided by 52.1, which gives us 7.9%. Now, throughout the year, you have income tax taken out in your check. She got a little excited and had $9,200 taken out. She only owes $4114, so she is going to get a refund. And to find that, you just take $9,200 minus $4114, and you'll see that she gets a refund of $5,086. Let's look at the FICA real quickly. FICA is, remember, it is calculated only on wages. You do not pay FICA. So the only thing that would be for FICA is the salary. So I'm going to do 7.65% of 50,000, which is $38.25. Okay, let's talk about Isaac and Libby. We didn't do this one in class, but we're going to do it now. Okay, so their combined income, let's see, well, they're married with one child under the age of 17. Okay, so that's going to be important. They have salaries, they have an adjustment, and they're taking the standard deduction. Okay, so their combined income is going to be $70,500. Okay, this is an adjustment, which means I'm going to subtract out $3,000, which means the adjusted gross income is $67,500. It says they're taking the standard deduction, which for a married couple is $24,400, which means their taxable income is $43,100. Okay, the tax owed, you have to go to the married column. And when you do that, you find that they owe 10% of the $19,400. And then you have to go to the next column, and this is below the $78,950, so it's going to be now 12% of $43,100 minus $19,400. So that gives me $1,940 plus $2,844, which gives us a total of $4,784. Tax credits. One child under the age of 17 is a tax credit. So for every child, they get to take off $2,000. And this is applied to the tax. So the total tax is going to be $4,784 minus the $2,000, which is $2,784. The tax rate, we would just take $2,784 divided by their gross income. And if I do that, I had not calculated this earlier. So $2,784 divided by 7,500 is going to be 3.9. Throughout the year, their payments into the taxes was $7,000. That's larger than what they owe, so they are going to get a refund of $7,000 minus $2,784, which is $4,216. And again, FICA is calculated on earnings or salaries, not interest income. So it's 7.65% of 70,000, which is $53.55. Okay, the end. Good luck tomorrow. You're going to be amazing. Our last test, yay!